Hello, clients and friends of Steward Wealth Strategies. This is Brant Spessart, and it is my pleasure to present our fourth quarter economic review. We at Steward Wealth Strategies believe that our clients want us to give them the best information that we can. We believe it's our fiduciary responsibility as good stewards to help educate our clients, and we truly believe that knowledge is power. If you want to make wise decisions, with your finances, you want to make sure you make decisions based on fact, data, and also knowing what are some of the best strategies available. So, one of our missions is to make sure we share knowledge with you, our client, so that you can make well-informed decisions. And there's six key areas of financial planning. Financial planning involves so much more than just investments. It involves retirement planning, investment planning, tax planning, protection planning, estate planning. And then here at Steward Strategies, we truly believe that generosity should be a key component of a financial plan. We believe that our clients are blessed so that they can be a blessing. We're blessed so that we can be a blessing. But as investors, we all know that investing can be easy sometimes and it can be difficult sometimes. Well, fourth quarter, markets had volatility. As you can see from this chart, it was a roller coaster of a ride for investors. Equities remained highly sensitive to the good news and bad news, and that really kept us on our toes, including information about lower interest rates, but the potential for the slowing down of monetary easing. The consumer price index is a key inflation gauge, and while we've seen results from the Fed, the Fed's aggressive campaign to lower inflation from its high of over 9% in just a couple of years ago, it's still not at their 2% target. For January of 2024, the inflation rate was about 3.5%, and as of December last year, it was just under 3 at 2.9%. Although inflation is far better than it has been, it did start to spike in 2021, and it's currently still increasing prices and acting stubbornly. Remember, just because inflation is slowing down does not necessarily mean prices are going down. It just means the rate at which prices increase has slowed. And the timeline as far as how quickly inflation will continue to slow down, we're going to keep monitoring that and keep you updated as we go. After a 50 basis point reduction in September, the Federal Reserve cut interest rates 25 basis points twice in the fourth quarter of 2024. That brought the total to 3 cuts for the year. These are the first changes since 11 rate increases from March 2022 to July of 2023. The decision to lower interest rates came in response to key indicators suggesting that economic activity continued to grow at a solid pace, while unemployment rates remain low. Typically, equities respond positively to rate cuts. However, during December, Fed Chair Jerome Powell indicated that there might be fewer rate cuts in 2025 than were anticipated. This cautious outlook led to a quick decline in equity markets, hence some of the volatility that a lot of us saw. Interest rates and inflation play a crucial role in investors' financial planning. Therefore, we will continue to monitor any changes and keep you informed about these key economic indicators. As you know, or as you may know, bonds generally have an inverse relationship with interest rates. When one goes up, the other generally goes down. Yields are currently close to multi-decade highs. And on December 31st, the 10-year note was about 4.5%, somewhat higher than the end of third quarter when it reached 3.8%, and the start of the year when they were at 3.9. The 20-year Treasury ended the fourth quarter at 4.86 and the 30-year note closed at 4.78%. The outlook for bonds in 2025 is hazy. Should interest rates continue to fall, bond prices should appreciate. However, should inflation start to increase in 2025, interest rates may stagnate or rise. Bonds can be part of a well-diversified portfolio because historically they have lower volatility than stocks. A lot of our clients are growth oriented, but unless you're 100% aggressive, you probably have some sort of fixed income or bond positions inside a portfolio. And with today's interest rates, they can become a little bit more attractive, for investors that are a little bit more fearful of volatility. Even with CDs and money market rates are still better than they were a couple of years ago. We typically consider using investments like this based on the client situation, the time horizon, but primarily based on somebody's comfort level. We are growth oriented with our advice, but we understand every client is unique. The global economy faced ongoing uncertainty during the fourth quarter. Global tensions remained high, particularly due to the continued unfortunate, Russia-Ukraine war, as well as unrest in the Middle East. Additionally, a new president was elected during this period, making the end of a highly contentious campaign season. Initially, the markets reacted positively to the election results. With anticipated changes in economic policy and tax laws, there are several key items for us to monitor. Now, remember, this is a review of fourth quarter last year. I know we're already into February of 2025, and we've seen a lot of action already taking place. But it's just, it's important to remember that corporate earnings and the overall economy are the primary drivers of financial markets. We're dedicated to staying informed and keeping you informed about any changes that may impact your personal situation. Although there is still a lot of uncertainty in the economy, we are still currently experiencing a bull market. The bull market began in June of 2023 or of 2023 after the S&P 500 rose 20% from its low in October 2020 in October of 2022. The past few years have been exceptional for the US stock market. However, inflation is being set up as public enemy number one. 2025, we still have inflation concerns. And for those of us who live in the triangle area, I know it's expensive. There's a mixed set of outlooks from a lot of different analysts. Many are optimistic about a continued market rally driven by ongoing AI growth and deregulation, as well as the potential for lower taxes. If interest rates keep going down, this could fuel the stock market even more. However, some are concerned that the US could experience a market correction. When the S&P 500 index falls more than 10% from a recent high, it is said to have entered correction territory. The term correction is used because historically the market drop often corrects and returns equity prices to their longer term trend. There have been 24 market corrections since November 1974. Why do we bring this up? One, we want to make sure you understand what the word correction means. It will be a headline, but also there have been, again, 24 market corrections since 1974. So market corrections aren't unheard of. For any of you that have been investing over an extensive time period, you've seen numerous corrections, but you've also seen growth. They historically happen on average about every 18 months. The S&P 500 did not experience a correction in 24. Analysts say that corrections are healthy and even necessary for bull markets. They help shake out some of the so-called froth in the stock market when prices run up too dramatically and get ahead of themselves. Analysts also share that a correction isn't necessarily something to dread. Most strategists are still predicting solid earnings growth for equities in 2025. And with that backdrop, most analysts project stocks will head higher even if there are some bumps in the road. And you've heard us say this before, Steward Strategies. Remember, volatility is the price we pay for long-term growth. So as a recap, here are some things to remember. 2024 was a robust year for equities and left investors with positive returns. The US economy has been strong and long-term investors were rewarded with significant returns. The Fed reduced the federal funds rate range 3 times in 2024, with 2 being in the fourth quarter alone. Inflation pressures are still being stubborn. 2025 brings a host of challenges which are creating uncertainty and market volatility. The key items we will be keeping a close eye on include proposed tax law changes. We've been talking about that for 2 years now. Proposed tariffs. Look, we've heard a lot about that over the past few days. Monetary policy changes, stubborn inflation rates, and geopolitical issues. Be well prepared. Maintaining the consistency of a well devised, long term, focused plan has historically served investors well. Remember, investing requires discipline, it requires consistency, but it also requires faith in the future. So, as your financial planners, your Steward Wealth Strategies team is here for you. If you have concerns or if you have questions, please don't ever hesitate to reach out to us. Don't feel like you have to wait for a meeting to have a conversation. We realize it's more than just finance, it's personal finance. And the accounts or the dollar amounts that we're blessed to be able to manage on your behalf, we know and recognize that those are families' hard-earned savings for retirement future, for college savings, for legacy and giving. We realize there's more to these accounts than the dollars. It's the people behind them, and we're here for you. So please reach out to us if you have any questions or concerns, or if you just want to talk through different scenarios. And you amazingly continue to bless us. We truly appreciate all of you that continue to send your friends, your family, your coworkers to have initial conversations or second opinions with us here at Steward Wealth Strategies. Thank all of you that are SWS ambassadors. If there is somebody you feel like should talk to us, please reach out to us, let us know, or introduce them to our team. Also, if there's ever an opportunity to speak, maybe your church is hosting Financial Peace University, or you want us to come speak to a small group, please let us know. We're honored to be able to serve you, and we're also honored every time that you put us in touch with somebody that you care about. So, thank you for the opportunity to share. Thank you for the opportunity to serve you. We don't take it lightly. This year will be a volatile year. And we at Steward Wealth Strategies understand that the finances that you entrust us with are important. Please reach out to our team if you have any questions. We hope you have a wonderful start to the new year. If you have prayer requests, reach out to our team as well. We pray for clients on a weekly basis. God bless you and thank you.